Well, hi everyone. Most of you know who I am, but for those that don't, my name's Ed Vaughn. I'm coming to you in video for the first time. Thought it might be a good idea to use video as a means to expand a bit on the market data reports that I send out. And so every month I'm going to look to provide a video to do that and answer a question I've been getting a lot of during that month. This month the question is, do we have a bubble forming or already formed and about to burst? The greater Denver market report gets into that on slides 5 to 15. And it seems like this question is coming to me being raised by folks because everybody remembers what happened back in 2008, and everybody's fearful that could happen again. Now, to be accurate, back in 2008 to 2012, Denver did not experience technically a bubble bursting. Um, Places like Arizona, Nevada, Florida, Detroit that lost 50 to 80% of their value actually could have been classified as a bubble bursting, but Denver is classified as a market correction that was exacerbated a bit by the subprime and bond markets, house of cards falling apart, which is what caused the problems in those other areas, Florida, Nevada, etc. So hopefully the government will keep the watchdogs in place to make sure something like that doesn't happen again. And watch the movie The Big Short if you're curious and want to get a more in-depth view of what actually happened there on Wall Street at that time. Warning, there's a lot of cussing in that movie, however, but it will give you a better feel for what happened. Um, but putting that aside, let's compare what was going on in the Denver market back in August 2007 to now, and to see if we can predict what will happen in the Denver market for the short term, at least here. So we're comparing August 2007 to now because August 2007 was at the apex of the market upswing we saw from the 90s up into that point. And so the question we're trying to answer is, are we at another apex right now? So back in the early 90s and early 2000s, new builds steadily drove up the supply in Denver. And you might think we have a lot of building going on right now in Denver, but reality is that we're only at like 30 to 40% of the levels of building that was going on back in from say 98 to 2007. You'll notice on slide 10 in the Greater Denver Report, you'll see the supply in August 2007 was very high, actually close to historical levels at that point. And we wound up getting to historical levels when that Wall Street bubble bursted. So anyhow, this high volume of inventory was what drove the market to buy side advantages and lower prices. And of course, now we're seeing the opposite on the supply side. We're seeing very low numbers, historically so, and those low inventory levels combined with pretty good demand on the demand side of things is what's pushing the Denver real estate prices higher. And so as long as supply remains low and demand remains somewhat high, prices really have nowhere to go but up. And since we have extreme levels on both the supply and I wouldn't say extreme demand levels, but definitely extreme supply side, the prices are going to go up quickly. So another thing the Greater Denver Report points out is the current market upswing is being built on wealth and not credit. And so this market will not correct much, even when that inevitable cyclical downswing happens. Slide 11 shows most homes are being purchased at higher price points than they were back in 2007. And of course, some of that is because all prices are higher right now than they were back in 2007. But that only accounts for a small percentage of that overall data point being made there. And slide 15 points out that the current market is seeing much higher percentage of cash transactions. So again, purchases using wealth and not credit. So what we're looking for going forward to see when a market shift might be happening is a change in the supply or the demand in the market. So we'll need to see inventory levels start to rise. A couple ways this could happen is that new builds increase and get closer at least to the levels that we were seeing back in 2007. And another way is migrations out of Denver increase, which that's really tied to demand side, but it would affect inventory as well. Um, so the other thing that would have to happen is for demand to fall off a little bit. And one of the reasons demand is so high right now is we have a pretty good size influx migrations into Colorado and into Denver in particular. So last year, 100,000 people moved to Denver, and we're on pace to see that same number again this year. And of that 100,000, about 70% or 70,000 are settling in the Front Range. Um, so until we see that start to fall off, demand is going to stay about where it is. Um, so the other thing, like I mentioned previously, that could cause demand to fall off is if affordability at the lower price points climbs past what people at the lower pay scales can afford, then people might start moving out of Denver, and that would affect the demand side of the equation as well. Um, Another thing, though, that's keeping affordability at reasonable levels, in fact, at really good levels, is the fact that mortgage interest rates are so low. Um, we're not expecting mortgage interest rates to climb until at least 2017, and probably not in the beginning of 2017, where the Fed is going to look to see what happens with the election and get a gauge on how strong the economy is post-election before they decide to raise interest rates again. And of course, if the Fed raises the prime rate, that doesn't necessarily mean mortgage interest rates will follow. They're not tied directly to the prime rate. In fact, this past December, when the Fed raised the prime a quarter, mortgage rates actually dropped a bit. So in summary, until market dynamics change, Denver real estate prices will continue to rise. And with the current extreme market conditions, prices are going to continue to rise quickly. But that doesn't mean that when the market shifts, when we get that inevitable downturn, that prices are going to fall at the same extreme rates as they climbed. Historically, real estate markets have been cyclical, meaning that real estate values rise and fall periodically, but on a overall upward trend. So right now is a great time to take advantage of equity gains in Denver, and it's a great time to move upward in Denver if that's something that makes sense for you personally. There's less buying competition at the higher price points. So anyhow, let me know if you have any questions about any of this, and please provide feedback on what you guys think about the video. I'm not sure what I think about it yet, but I'm really anxious to hear what you guys have to say about it. Hopefully this was good info for you. And oh yeah, Peg provided feedback that I need to smile at least once. So there you go. Take care, everybody. Talk to you soon. Bye-bye.